Hello, everyone, and a very warm welcome to you all. Thank you so much for tuning in to watch this analysis. We are really excited to have you here with us today.
Yeah, it's great to be here. We have a massive amount of ground to cover.
We certainly do. Today, we are unpacking Tower Semiconductor. And honestly, if you haven't looked at Tower in a while, you might be surprised. We're breaking down their Q4 and full year 2025 results, but I think more importantly, their new strategic financial model.
That's exactly right.
Yeah.
This isn't just, a standard earnings recap. It's a look at a company that is, I think, fundamentally changing its identity.
Right, because for years, people thought of Tower as this steady specialty foundry, good at what they did, analog sensors, but maybe not the flashiest name out there. But looking at this report, they are putting themselves right at the center of the AI infrastructure boom.
They are. They're pivoting hard. The headline isn't just that they grew, it is how they grew. We're seeing this real shift toward high-value markets.
And what are those markets?
Specifically, the optical plumbing that, makes AI data centers work.
Okay, so let's jump right in. Part one, the company presentation. Let's start with the scorecard. How did they close out 2025?
They closed on a very, very high note. For the fourth quarter, Tower hit revenue of $440 million. That's up 11% from the last quarter and 14% from a year ago.
Okay. And for the full year?
For the full year 2025, total revenue was $1.566 billion.
Okay, so solid double-digit growth. That's
Well,
great, especially in a cyclical industry. But, in the chip world, revenue is vanity, profit is sanity. What's happening below that top line?
And this is where the story gets really interesting. Net profit for Q4 was $80 million. That gives them an 18% net margin.
18%.
Now, to give you some context on why that matters, back in Q1 of 2025, so just 9 months earlier, that net margin was only 11%.
Wow. So they nearly doubled their profitability percentage in a single year. That is, that's not a small feat for a manufacturing business.
It isn't. And that tells you something crucial. They aren't just selling more chips. They're selling better chips, more expensive, higher margin chips.
So what's driving that? Is it just them getting more efficient, or is there a specific technology that's commanding that kind of premium?
It's the product mix, 100%. They're shifting towards what they call their market-leading optical transceiver offerings. The big one here is silicon photonics, SiPh.
Okay, let's pause there. Silicon photonics. We hear this buzzword a lot. For the benefit of everyone listening who isn't a physics major, can we just strip away the jargon? What are we actually talking about here?
Sure. So think about how traditional chips move data. They use electricity electrons pushing over copper wires. That works fine for short distances or, lower speeds.
Right.
But when you're inside a massive AI data center, what Google, Microsoft, Meta are building, you need to move just ocean loads of data between thousands of servers and instantly.
And copper has resistance, right? It gets hot, it slows things down.
Exactly. At those speeds, copper wires just act like a traffic jam. They get too hot, the signal degrades. Silicon photonics replaces those copper wires with light. It uses tiny lasers to move data. It's faster, cooler, and just way more efficient.
So Tower is making the chips that convert the electrical signals from the GPU into light signals to zip across the data center.
That is a perfect analogy. They're building the high-speed on-ramps for the AI superhighway.
And the demand for that must be exploding.
Oh, it is. In their report, they noted that RF infrastructure revenue, which is where this falls, it increased 75% year over year.
75%.
75%. And it's being driven entirely by the hyperscalers adopting 800G and now 1.6 terabit transceivers. The demand for bandwidth is it's insatiable right now.
And looking ahead, what's the guidance for the first quarter of 2026?
They're guiding for $412 million in revenue, give or take about 5%. That's a 15% increase compared to where they started in 2025. So yeah, the momentum is carrying forward.
Now, you mentioned the hyperscalers. There was a lot of buzz in this report about a partnership with a certain AI giant. What's the news with NVIDIA?
Right, this is a critical piece of the puzzle. Tower highlighted a collaboration on 1.6 terabyte per second silicon photonics. And the key takeaway here is that Tower claims to be the majority supplier of these photonic integrated circuits, or PICs, for that standard.
Majority supplier.
Yeah.
That is a very bold claim. That puts them right in the engine room of this whole thing. But my question is, to supply that kind of volume, you need factories, you need capacity. What are they doing about that?
They're going all in. Tower announced an additional $270 million investment in CapEx.
Additional? On top of what?
On top of their existing plan. It brings their total recent expansion plan to $920 million.
Nearly $1 billion. For a company the size of Tower, that's a massive bet. That's not just maintenance, that's aggressive expansion.
It is. The goal is specifically to expand capacity for silicon photonics and silicon germanium, or SiGe, they're targeting. Well, their goal is to achieve 5 times the capacity of their Q4 2025 shipments.
5 times. Isn't that risky? I mean, we've seen chip cycles before. What if the AI bubble bursts and they are stuck with $1 billion of empty clean rooms?
That's the question every investor should ask. But Tower has an answer for it. They revealed that over 70% of this total SiPho capacity is already reserved through 2028.
Reserved how? Like a restaurant reservation?
No, it's backed by customer prepayments.
Okay, so the customers have already bought the ticket.
Precisely. They aren't building it on hope. They're building it on contract. It really de-risks the whole investment significantly.
That changes the picture completely. Now, while we are talking about factories, we have to address the elephant in the room. What's the latest on that Fab 11X agreement with Intel? That was kind of a messy situation.
Right. So Intel has expressed its intention not to perform under the agreement. Essentially, the deal is off. Tower is currently in mediation about it.
Yikes. So what happens to the customers who were supposed to use that fab?
They have a plan. They're redirecting those customers to Fab 7 in Japan. So it seems like they're managing the fallout, but it's definitely a complication they have to work through.
Okay, so they're pivoting those wafers to Japan. Let's look further down the road. The CEO, Russell Ellwanger, he presented a new financial model, their North Star. What are the targets?
This is a revised model for the calendar year 2028, and the numbers are incredibly ambitious. They're targeting annual revenue of $2.84 billion.
That's almost double where they are now?
It is a big leap. But look at the margins. They're targeting a gross margin around 40% and a net profit of $750 million. It's a 26.4% net margin.
26% net margin. I mean, that is incredibly efficient for a foundry. How do they plan to hit that?
It all comes back to that product mix we discussed. Silicon photonics isn't a commodity. It's a high-value specialty. You fill a factory with high-value chips, your margins expand fast.
But there's a catch, right? There has to be.
There is a condition. It assumes they achieve 85% utilization of Tower-owned capacity. And importantly, this model excludes that Intel fab. This is all based on the assets they control and are expanding right now.
That sets the stage perfectly. Strong growth now, a huge bet on SiPho, and a really profitable target for 2028.
Exactly. But, the devil is always in the details. And that's where the Q&A session comes in.
Right. Let's move on to part 2. The analysts got to grill management, and they asked some really sharp questions. Let's maybe group these by theme to really get at what the market is worried about.
Good idea.
So the first big theme was obviously the NVIDIA connection. Analysts really wanted to understand the mechanics of this deal. We had questions from Mehdi Hosseini at Susquehanna and Tavia Rosner from Barclays on this.
Right. The confusion was around the word module. An optical module is the finished metal box you plug into the server. Mehdi was asking, is Tower making the chip? Or are they making that whole box?
Because that's a totally different business, right? Different margins, different competitors.
Exactly. And Tower was very clear in their response to both of them. They are not shipping directly to NVIDIA. Tower supplies the silicon photonics ICs, the chips, to the module makers, the integrators. They build the box, and they supply NVIDIA.
So Tower is a Tier 2 supplier here, the engine manufacturer, not the car dealership.
Perfect analogy. But they did note the partnership involves aligning on supply needs. So NVIDIA knows exactly what Tower is doing, but the invoice goes to the module maker.
Maybe also asked about high voltage power, something about 800 VDC for AI server racks.
Yeah, a really specific technical question. He wanted to know if Tower was playing in that space. And the company was pretty transparent. They don't currently have an 800-volt IC platform. They have some components, but not the whole integrated circuit platform yet.
Got it. Sticking with tech for a second, Tavia Rosner also asked about co-packaged optics, or CPO. What's that?
So right now, optics are pluggable modules, like a USB stick. CPO means putting the optics directly on the same package as the GPU itself. It's the next big step. Tavia asked if Tower's doing R&D on that CPU or GPU side. And they said no. They're working on the architectures with the XPU makers, but they aren't getting into the business of packaging CPUs. They're staying in their lane.
Smart. Stick to what you know. Okay, the second major theme was execution risk, that huge $920 million investment. Tavia asked, can this happen any sooner? And Cody Ekry from Benchmark was asking about visibility.
Right. This is the hurry up and wait problem. The demand is there, but the machines aren't all in place yet. The CEO, Russell, he explained that tools are arriving all year, but the bulk of that investment should be online and qualified by Q3 of 2026.
So late summer 2026 is the magic moment.
That's the milestone. Their
Yeah.
target is to have full start capability by December 2026. That's the deadline they need to hit to make that 2028 model a reality.
And Cody Acree, he pushed on that visibility. He basically asked, how sure are you about 2026 and 2027?
And this is where the company just leaned so heavily on the prepayments. They told Cody that demand is solid, it's prepaid. The challenge isn't finding customers, it's purely operational. Getting the tools installed, qualifying the process flows. The CEO seems very confident because the check is already in the mail, so to speak.
Cody also brought up a really interesting point about the mobile market and memory shortages. The domino effect, right? If phone makers can't get memory, they don't need Tower's RF chips either.
It's a classic supply chain risk.
Yeah.
How did Tower respond to that?
They used a very specific word, fungible.
Fungible. Right.
Mhm.
What does that mean in a factory context? It means their capacity is flexible. If mobile demand drops, they can backfill that space in the fab with other products, like power management chips, to keep the factory running at high utilization.
That flexibility is key, so they aren't held hostage by a single market.
Exactly. And that ties into a question from Tyler at Craig-Hallum. He asked if silicon photonics alone would get the factory to that 85% utilization target. And management said no, it's the combination. It's that fungible mix of photonics, power, and RF that gets them there.
Tyler also asked about the $2.84 billion target. Is that a run rate or for the full year?
The goal is for the full year, but they said it will certainly be achieved as a run rate within 2028.
Okay. And the last theme was just some housekeeping, right? From Lisa Thompson at Zacks.
Yeah, just digging into the ledger. She asked about a one-time tax benefit in Q4, which is about $10 million, and also the cost of their Newport Beach lease extension.
Right. They announced that back in November.
Yep. They confirmed they paid $105 million cash upfront to extend that lease to 2030.
Which tells you they plan to be there for a while.
Definitely. And she asked about depreciation rules, which they said had no impact.
Okay, so let's bring this all together. Part 3. We've gone through the numbers, the tech, the risks. What are the high-level themes we should walk away with?
I think if you only remember one thing, it should be the shift to high value. Tower is successfully pivoting. They are moving away from lower margin stuff and going all in on AI infrastructure, silicon photonics and 5G, 6G with SiGe. That's why you see profits growing even faster than revenue.
It's a quality over quantity strategy. They're not trying to be the biggest foundry. They're trying to be the most specialized in these really valuable niches.
Precisely. And I also picked up on a specific tone from the CEO, Russell Ellwanger. He's been there for 20 years, but he sounded, I don't know, surprisingly aggressive.
He did. He closed with this theme of bold growth, limitless impact, infinite reach. He really pushed back on the idea that Tower is some, aged company.
Yeah, he wants to prove they can still sprint. He cited that 50% compound annual growth rate on net profit in the new model as proof. He basically said, look at our growth rates and tell me we aren't youthful.
A 50% CAGR on net profit is definitely not a sleepy old growth statistic. That's startup territory.
And I think the final theme is just execution. The selling phase is over. They have the customers. They have the prepayments. The next 18 months are just, boring but critical. Install the tools, qualify them, turn on the factory.
So it's no longer about vision, it's about plumbing.
It's about building the factory. If they build it, the revenue is contractually obligated to come.
It sounds like a really pivotal time for Tower. They are betting the farm on light, on silicon photonics, and it looks like the market is absolutely ready to pay for it.
It seems that way. The pieces are on the board, now they just have to play the game.
Well, that brings us to the end of our summary. I really hope this helped you understand why a company you might not have thought about in years is suddenly one of the most interesting plays in AI hardware. So thank you all for watching and listening to this breakdown.
It was a pleasure. A lot to unpack there.
If you found this breakdown helpful, please do click the like button, maybe share the video with your colleagues, and subscribe to stay tuned for our upcoming content. We've got more coming your way soon. Thanks for watching.